Hi, this is Acme with the Bulletin Board Heroes here at Vox Markets for Thursday, the 9th of December. Starting with Abingdon, which is not only near the bottom of the range, the shares also made a higher low for December versus back in August, which is a plus point. Got bullish divergence there, so the lower price for December with a higher RSI trade, so that's a second plus point. And then the third one, which is actually maybe the most compelling, we had a gap down at the beginning of the month. Top of the gap there at 20, well, call it 30 pence, and the share's now above 30 pence, so that does suggest that it's a failed exhaustion gap and a potential bear trap situation. As initially, we've got up to 33, 34 pence, which is that November resistance line, but if we can break that on an end-of-day close, it could be back up to 40 pence. And obviously, the shares have done well from the sort of around the 30 to 35 pence zone as a bottom fishing opportunity. We had that several times. We've had that several times since the summer, so let's see if it's another bottom fishing play for the bulls to go for. At this stage, only back below 28 pence on an end-of-day close basis, really questioning the idea that Abingdon is a potential bounce situation. On to a stock which has a somewhat amusing epic code, about as amusing as you can have on the stock market. It's Seraphine. Here we've got an island reversal, a bear trap island reversal, so that is interesting. Top of the gap there at £1.63, so above that we're looking at a potential recovery. We've obviously already had a spike up towards 190. We could repeat that over the next 2 to 4 weeks while there's no end of day close back below £1.63. But you don't usually get such a clear bear trap gap reversal as we have on the bump chart. On to stock which is probably one of my favorites of the recent past, Beowulf Mining, just because it just keeps going up, either slowly or quickly. We've had, I said before, above 8 pence, and the former target there, we're looking at 13. That's still the case, a little bit more to go maybe over the next week or two in terms of Beowulf's upside. Last resistance there around 10, so if you're a bit squeamish, maybe that just below 10 pence could be the stop loss if you're trying to run the position up to 13, but what a great run that's been. Better day for some of the Colin Bird stocks. Here we've got Bezant, and here the shares, I suppose they just hit that line there from back in February. That was around the 0.11 level. Above that, got another chance for the shares going up towards the high teens over the next month or so. But if you're cautious, maybe wait for the RSI to get back above 50. It's just below that at the moment before getting too excited. One of the big movers of yesterday on the vaccine passport situation was Catanei, and it's managed to follow through, at least hold the best of yesterday's level. So we just managed to briefly break yesterday's high around 0.88. Current situation is that while there's no end-of-day close back below yesterday's close at 0.78, then we are looking for maybe further progress, best case scenario up to 1.2 maybe by the end of next month. If you're cautious, maybe you want to see an end-of-day close above 0.88 before assuming there'll be further gains for the shares. Moving on to a stock which is still a bullish favorite, GTech. Here you can see that there's been this week's bounce off the 50-day moving average. That suggests that we're still ready to head higher up towards the 50 pence level. That's the top of the rising trend channel from the summer of 2020. And at least while we're above that 28 pence, then that's hopefully where the shares will go, maybe by the end of next month. On to Galileo, which had a very strong announcement today. I think the cash has come in, or will come in, to the equivalent value of the current, the market cap before the announcement, around the 8 million level. So we also have on the daily chart potential broadening triangle rebound. So bouncing off the three quarters of a penny level. Initial target here, perhaps up towards the 1 penny level, maybe up towards 1.1 over the next week or two, which is the 50-day moving average. And then after that, the shares got a chance of reliving their former summer glories above 1.5 pence. But at least initially, 1 to 1.1 pence looks to be on the cards for Galileo. On to the stock of the other stock of yesterday. First was Cat 9, the other one was Gene Drive. Was looking for 80 to, well, I suppose I was looking for 80p, but that line is now up to 83p, so maybe that's the best case scenario target in the near term. 81 the high so far, so not too bad in terms of the technical guesswork. Just missing that resistance line there from July. The moment, probably while we're above the closing level of yesterday at 64 pence, looking for further forays in towards the 80 pence plus zone over the next week or so once the dust settles. Stock which has been particularly difficult on both the fundamental and the technical front is Nanosynth, and here we see once again that the shares seem to have support in that 0.55 to 0.6 pence area, so we've had that so far this week. Also, we've got bullish divergence there with the lower lows of December to date, not matched by a lower RSI. In fact, the RSI quite a bit higher, so that does suggest that we're going to at least have another attempt at breaking through the 50-day moving average. That's around 0.69, and then perhaps retesting the troublesome 0.8 to 0.9 resistance area, which has kept the shares blocked since the middle of September. At this stage, only back below an end-of-day close, back below 0.55, really sounding any fresh alarm bells. On to Panthera, which I look at occasionally. Here we've got a broadening triangle, which seems to be pointing towards the 22 pence area. The more we stay above the 50-day moving average at 12 pence, the greater the chance of 22 pence, maybe by the end of next month. Good news from Tirupati with its Vatamina efforts, things starting up there. Here we had that bear trap, narrow bear trap that I talked about yesterday. I'm quite pleased with having guessed that could be a turning point. Basically, we were looking for an end-of-day close above 66 and a half pence, and we got that. And obviously today we've gone up towards what was suggested as a target before, the 50-day moving average area. That's currently at 82, so hopefully we'll hit that before too long, maybe by the end of today. An end-of-day close above the 50-day line could get the shares back up towards the 200-day moving average and form a September support in the 100 pence area. And that could happen even by the end of this month after that narrow bear trap. So quite a classic signal, and probably one of the more difficult charting things to pick up on. Finishing off with a request, which is actually quite a horrible one in the sense that it's very, very difficult indeed. THG. We did have a trendline break there from October, so that broke around the 180 level, but the shares haven't really followed through. The other point is the way that the RSI is still rising, so there's a little bit of bullish divergence, but one has to say that really you want to see an end-of-day close clear of 190 before getting too excited about THG at the moment, or alternatively, obviously, looking to buy any dips towards the 170 area. So just one of those situations that slightly confusing in the sense that really the shares should have had their rally already, and they have not. So maybe wait a little bit longer on THG before making any move. But it's really either a break of 190 or 170. Apologies for not being more constructive than that at the moment. That's it from me today. More updates tomorrow.